All right, guys, this is probably one of the most important conversations I've ever had with the team behind MaxFi and Agent Max so far. And but it's because so many DeFi investors out there, they're actually doing it wrong. And the reason is so simple. And I think that this team has found one of the best wealth building strategies for the next bull market. And these are called Agent Max accumulators. And our guests today, Alex and DAO King, the team behind MaxFi and Agent Max, are here to tell us the story. Over the last several weeks, we have been testing correlated pairs, and I'm going to let DAO King and Alex take it from here and explain how this pair is not just a wealth accumulator, but it's what DAO King likes to call the holy grail of LPs. So take it away, DAO King.
Yeah, so what Alex is showing here is basically what we're looking for and where I made most of my money in the last bear market. Basically, you need two pairs that you can write up together. So if you're in, like, for example, ETH and USDC, well, you're going to be basically limited on how high or how, where it goes. If it pumps 30%, you're not going to get the full 30%. If SOL wrapped ETH pump 30%, or if they go up 2x or 3x, you're going to get all of that. And right now, what Alex has found is a pair on PancakeSwap that I can't actually even believe. Agent Max found this. I honestly, I can't even believe it. It's earned in last almost over 2.5 days, 239% in a 3.1% range. Alex is going to talk about more details about it. But before he does, I'm going to show you my screen, because I'm going to show you something. When you're going to go, what does all this mean? How much money can I make? Well, these are the numbers. This is on our Discord. You guys should definitely join our Discord, because Alex with his AI ran the numbers. These are the numbers, guys. In the SOL ETH pair with $14,000, what you can earn in 1 year if it does a 2x, it's 58,000. In 2 years, it becomes 120,000. And then if they do, one does a 3x and one does a 2x, it's 71,000. And it's 147,000 in 2 years. And then this is where it gets crazy. If SOL and ETH in the bull market do a 3x each, instead of, for example, if you're just holding on to SOL and ETH with $14,000, you're going to have about $42,000. This is double that in 1 year. And in 2 years, it's like 4x that number, $180,000. It is so different. This is why we call this the holy grail of LP farming. When you find a pair like this, and I'm farming this on Aerodrome. I can show you my numbers afterwards, but I'm getting about 160 to 180%. So some of them a little bit higher, even up into the 200s, but he's found one. Agent Max, I should say, has found one, because the Agent Max is like the intelligence layer of MaxFi and Snuggle. So go ahead, Alex. You with your wisdom, share upon us what you have found here.
Thanks,
yes,
DAO
we
King.
want to hear what the genius dev has to say.
And thank you, Kevin. So in my analysis and discovery processes and backtesting engine that I've built with Agent Max, I have searched thousands of pools on Base Chain with true to the Snuggle rebalancing technology engine to backtest our own strategies on them to a T, essentially taking everything into account. The actual liquidity in the pools, the actual emission rates, the actual volume flowing through the pools, how the positions rebalance on the tick spacing in each pool, how the rebalance delay works with time in range and out of range. And it has identified pools with a major edge. And the reason SOL and ETH pools and pairs in general have a huge edge is because they're two of the most correlated blue chip assets in all of crypto right now, with like a 90 to 92% correlation factor over 120 plus days. And in 2023 and 2024, they stayed very correlated for a year or two straight. And I farmed it heavily as one of the easiest plays I ever did. And right now, the conditions have aligned the exact same way again. But this time, we have pools on Base Chain that are absolutely printing right now. For instance, this SOL/wrapped ETH pool on PancakeSwap, on Snuggle and MaxFi, is doing 240% over about 3 days, 0 rebalances at 3% range with a 52-hour delay, and it is just a monster. The reason this is because we are getting a lot of volume through these pools, plus cake emissions on top of it, and we have a first mover advantage, which means other people haven't discovered this yet. So we are going to be getting the lion's share of all of these juicy fees and rewards before everybody else, allowing us to compound our SOL and ETH much faster than everybody else. And we've got some time ahead of us in this bear market to just ride SOL and ETH through. And then when the bear market or the bull market comes back, it's one of the easiest plays coming out of the bear market into the recovery that you can do in terms of profit. Because I don't really care about the dollar value of these positions. They just follow SOL and ETH. But when SOL and ETH come out of the bear market and do a 2x or a 3x immediately, let's say in 2027, my positions all double or triple in value on top of all of the compounding and accumulating I've been doing in these liquidity positions. Now, this is just one example that is available on Snuggle and MaxFi. One thing to note, this is not possible on any other system other than Snuggle and MaxFi. If you try to run these same strategies manually on PancakeSwap or on Aerodrome or on another system, they will get wrecked. You will not get the same results. And our back tests with Agent Max are true to the Snuggle rebalancing engine. So that is how we found these optimized settings on these pools that have a distinct edge over other liquidity pools. And then we have our own edge with the Snuggle rebalancing technology that nobody else has to remove all the hidden costs, the swap fees, the slippage, the price impact, the MEV extraction, and we drastically reduce impermanent loss by 40 or 50% per rebalance. And then we remove unnecessary rebalances with the rebalance delay setting here. So it's a perfect setup for accumulation in a bear market where we are just adding tokens aggressively to our portfolios through these liquidity position vehicles that have complete upside exposure when the prices go up, which other pairs might not have, like a wrapped ETH USDC or a USDC/CBBTC. Those are great in sideways markets, but as a lot of you know, they have a capped upside. Price moves up, you're converted to USDC, you don't get any further price appreciation. SOL/wrapped ETH, though, if they do a 3x, your LP does a 3x essentially. And so do all of the rewards that you earned along the way. Now, this is one cool.
Can you show us the data that backs this up that you showed us on Agent Max? That thing was incredible what you showed us.
Sure.
Yeah.
So here is Agent Max's latest report, version 11.1. And this is many hundreds of iterations over many months of intense work, building, optimizing, and iterating to improve her backtesting and discovery engines. And what she found is this SOL wrapped ETH PancakeSwap pool. I think it's a 0.05% fee tier, that the moderate setting she has chosen is 3% wide with that 52-hour delay like I showed you. This is a 120-day backtest. Compared to just hodling the tokens, the annualized return would have been 65% higher than just hodling the tokens. And the absolute return, 62%. And it shows the breakdown between fees and cake emissions that you earn in this pool, giving you a total of 106% average APR over 120 days. And in the recent 45-day window, it's even higher because the volume is just picked up on these pools. The impermanent loss is very, very low over this backtesting window. And with the high amount of fees that you're earning, we have what is called a cover value of 2.5x, meaning we are over earning any impermanent loss by over 2.5x. And this is compounding. So we are compounding and getting compounding growth on these positions, further speeding up the growth and accumulation of these positions. If you guys are familiar with the principle of compounding interest, It works the same way here, as long as you are out earning impermanent loss. And we've got a few of these pools that have a significant edge of earning power versus impermanent loss with the proper settings that Agent Max has found after running tens of thousands of combinations of range widths and rebalance delays over these pools over 120 days. And it tests not just that window, but other backtesting windows as well to find real edges that hold out of sample. So it's a real edge rather than just a path fit to a specific backtest. And that's the key here, because you can set up any backtest. If you guys have made trading bots and things like that, you can basically optimize something to crush a backtest, but then in the real world with uncertain future results, they get crushed out of sample. This is looking for real edges that hold out of sample. So even if things change up, this will still have an edge. Now, backtested results don't guarantee future results, yada, 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 all that. But this is some of the best data we have for LP strategies that nobody else has on a capital efficient system like the Snuggle rebalancing tech found on MaxFi and Snuggle. Now, the second pool that everybody's been talking about, DAO King, Kevin.
Yeah, that's the one that I'm in.
DAO King's been in this pool for 40 days. When we first flagged it, when Agent Max first found that, he's like, I got to find out if this is real. His position has been crushing it. He has been just accumulating long before any of us really started scaling into this. This is the uSOL / wrapped ETH Aerodrome pool, CL200. So it's got 2% wide tick spaces. It's kind of a chunkier liquidity pool with how it moves around because the tick spaces are so thick. But with a 4% wide range and a 9-hour rebalance delay, annualized, it would beat just hodling the tokens by 92%, which means if that continues over not just 120 days, but let's say 360, you've essentially doubled the amount of Solana and Ethereum you are holding in that liquidity pair, in that liquidity position. And it doesn't matter dollar-wise what the price or the value of that liquidity position does. If it goes down, it just tracks Solana and ETH. They're very correlated. They move together. But when they move up, let's say we come out of this bear market and do a fast 2x or a 3x going into 2027, you get that full price appreciation on the liquidity position value, which other types of liquidity pairs might not have. That's why correlated pairs are so important right now in a bear market where accumulation is the key to true wealth building, because now you're holding, let's say, twice as much SOL and ETH than you were when you first started. And then that 2x's or 3x's, and as DAO King showed in that screenshot, the numbers, when you convert that to dollars, if that plays out, is ridiculous. It's the fastest way to accumulate wealth according to the 4-year cycles, using accumulation as the main metric versus just trying to chase dollars, trying to time the bottoms, trying to time the tops, which is impossible. Dollar cost average into correlated pairs, accumulate in those correlated pairs, and then ride them up. And when you have that 2x, 3x later this year or next year or the year after, start selling, start taking some profits. But anyway, this pair, absolutely killer as well. Also, there's another little distinction to make. The uSOL / wrapped ETH Aerodrome position is staked on MaxFi and earns Aero rewards only. And the Aero emissions on that pool right now are spectacular. DAO King's been doing like 200% for like a month straight on it. And Aero has been going up in value. So all that Aero token that he's accumulating is just like going up like 20, 30% over the last month, meaning all the rewards he's earned has appreciated in value. So when he goes to sell that for more Solana and ETH to compound into new positions, he has even more. Now, if you're running this on the unstaked version on Snuggle, where you don't earn the Aero rewards, but you earn the raw LP fees in uSOL and wrapped ETH tokens with the 50-50 auto compounding matching token system that we have, no swap auto compounding. These are the settings that you would see, and these are the results you would see. Now with the staked Aero, it's slightly higher at the moment than even this. But even without the staked arrow, this has been an absolute monster. The volume going through this pool has consistently been higher than the total liquidity in the pool, meaning more volume is flowing through the pool than liquidity that exists in there, meaning the fees that are earned to all of the liquidity providers like us is very, very high. And if you notice, this only rebalanced 15 times in 120 days at 4% Y.
That's crazy.
Alex, can you explain to us why no one else has found this pool? Why there's so much volume going through it? Like, what is the reasons for the volume going through this all of a sudden, and that no one else is in it?
Great question.
We literally, between MaxFi and Snuggle, have, I think, 30 to 40% of the liquidity in this pool now.
That's definitely a first mover advantage there.
It's base chain infrastructure development. So uSOL is the universal SOL token, and SOL on base chain is the Coinbase bridged SOL. And Coinbase is trying to bring more liquidity and volume to their Solana equivalent on base chain, meaning they have Solana on their central exchange, and they now have a Solana bridge token on the base chain, and the volume flows between Coinbase, which is like the biggest exchange, and base chain. And they have arbitrage bots that keep those prices in check. Those arbitrage bots create consistent volume, just keeping the prices matched up with arbitrage bots. So that's one reason. The other reason is people on base chain are looking for Solana token exposure without going over to Solana. They want to stay in the Ethereum virtual machine, the EVM blockchains like base chain, but they still want Solana exposure. These are relatively new over the last year or two. So people are discovering, hey, I can trade Solana on base chain. I can trade Solana on Coinbase, and I can transfer back and forth very easily. So the volume is very high, and the liquidity, because liquidity providers haven't necessarily figured this out yet, the liquidity is very low. It's very low competition, very high volume, very high fees. So we are getting an extraordinary amount of fees compared to more established tokens and pairs that exist on base chain. So it's a first mover advantage for sure. They're also heavily incentivizing this uSOL position on Aerodrome, which is, associated with Coinbase, and they want to get more liquidity into these bridged Solana tokens to have very low slippage, very low price impact swapping and trading on these Solana equivalents on base chain. So they are heavily incentivizing liquidity providers like us to put our money in here, and they are paying us very well to do so.
Okay. Well, talking about not just the holy grail of correlated pairs, but and the accumulators that I want to talk about a little bit later in the video, as far as some of the research that Agent Max has done. But before we go any farther and get into greater detail about MaxFi or Agent Max, I wanted to zoom out a little bit and just talk about the market itself. Now, DAO King, could you bring up the chart that I gave you?
Is that the one?
Is it there?
Yes.
Yeah,
Okay,
you
awesome.
see it? Yeah.
All right. Well, see, right now you're looking at Bitcoin's day chart, or the Bitcoin chart on the daily. And if you zoom in, we have broken through our bear flag. If you go on I don't usually go lower than the daily when I do things like this, but if you go down to the 4 hour, you can see that we have now tapped into it again. A little bit of a sell wick right there. I don't know, but this is part of the reason that I have kind of mentally prepared myself that Bitcoin's going to go a little bit lower this year. Now, I don't know Where to? I don't know for how long. Although I do have my eye kind of in the lower 50 region is what I'm looking at. But in the big picture, I don't necessarily think this matters. So how do each of you see the rest of the summer playing out? And what do you think Agent Max, or how do you think Agent Max currently sees the market conditions? Are we in an accumulation environment now? And we can start with DAO King if you want.
Well, you know, the thing is, I've always said, and the most of the time, the most amount of money I've made is investing in the bear market, and the reason is I don't overthink it. To me, this is great information, but it's overthinking it. You know, oh, we go below this mark, it's going to go below that mark. The times I've made the most amount of money with LP farming was during the last bear market. I didn't even look at any charts. I just saw that ETH and BTC had dumped. And you know what? I went and made a sizable LP. I put it in PancakeSwap and I forgot about it for over a year. I didn't even look at it. And I just went in there and I would compound my earnings. And then I woke up a year later and go, oh, this LP is getting pretty chunky. That's what I did. And then eventually, about a year after that, I moved over to ETH BNB because that was paying more. And I didn't have the tools we have with MaxFi and Agent Max. If I had those tools, my God, I would have made 6 figures. Yes, I made about 5 figures, but I would have made probably a couple $100,000. And that's what I'm planning to do this time. The thing of the matter is, if you look at my account, I have about $15,000 in my account. I've earned about $10,000 in fees so far. If I didn't start my account, well, I wouldn't have had any earnings right now. So what's going to happen in another 6 months? Well, I'll probably have about, let's say, another 6 months. I'll probably make another $20,000 in fees. Add that to the $10,000 in fees. So I'll have about $30,000 in fees that I've earned. And let's say my account falls because of impermanent loss, which I don't think so, because I have a lot of wrapped SOL ETH now. So I've actually even stopped that from happening to a degree. So I'm going to have a huge account going into the year next year. And because I'm actively farming it, you see, there's a thing. Everyone's just trying to time those moments. You won't. Like I've said before, like I tell this story all the time. The people in my group, I have 1,000 people in my own Discord group, DAO King Discord. And last bear market, when Bitcoin hit around 20,000, everybody was calling for 10,000, 12,000 in my group. All these guys were yelling, oh, it's going lower, it's going lower. And then it fell to 16,000 because FTX sold. And all those same guys, oh yeah, and they would bring up their fancy little charts with their little squiggly lines. It's going to go this because of this, and the bear flag, and the cross, and the golden cross, and the pirate cross, and this cross, and all this shit I never even heard about. They would just fucking bring up all these fucking random charts. Insane. And everybody's going, it's going to, even guys in my group, oh, I'm waiting until 5,000. I'm like, bro, what are you talking about? Okay. Then it went up a little bit from 16,000 after FTX sold off. That was the moment I started buying. My first buy, I actually looked it up last year, was at $20,000. And I consistently was buying huge amounts of it from 20,000 to about $25,000. I bought huge amounts of it because I could see it had already kind of broken out of its range and it was moving in a positive direction. I cleaned up on ETH and on Bitcoin, mainly Bitcoin. I cleaned up. All the people in my group that were waiting for 12,000, 10,000, 5,000 didn't even bother to buy. And that's the danger. They didn't bother to buy. If you're not, and I started LP farming also. So I made a bunch of money off LP farming. You know, I made a significant amount. I made about 4.5x. Huge numbers from what I invested. And I invested a good amount. So this is what I would tell you. I would tell you, if you have like $100,000, I would tell you to start LP farming now, because you'll learn some lessons along the way. Number one, you'll figure some things out now. So when you're going into that bull market, you're prepared. If you're not invested right now, you're going to miss the whole thing. You're wasting your time. You should just be watching Netflix all day long. Because if you're not invested now and you're not looking at how much you're bringing in and how you're optimizing your account, finding LPs like Alex has with Agent Max, and if you're not finding these LPs and you're not fully looking at these, understanding how to maximize them, you will not be investing at the right time. You'll be a bystander. You're just going to watch it. the bull run's going to basically miss you by, or you're going to be one of those guys that's going to come in late because you've missed the whole train. That's my feelings, and it's happened every single time. This is probably this is my third, or even this is my third cycle, so I know exactly what's going to happen. Majority of people who are waiting for certain things are going to miss it. I would start DCAing in with 20-30% of your income, and then if the market falls, you buy more. That's how you do it. If you DCA in over, scale in slowly, you will do better than somebody who's just a pedestrian and just watching what's happening, just a bystander.
And to kind of add to what you're saying, part of the reason I originally was like, I really need to hone my own skills in technical analysis was not just to dollar cost average. And I made a video, an article about it recently, but like to dynamically dollar cost average, which, pretty much just means as the market goes lower, I'm dollar cost averaging more on a percentage basis. And likewise, as the market gets hot, I'm dollar cost averaging a little less, eventually stopping altogether, and then kind of reversing and laddering out. But same process for going into the market and going out of the market.
Right. I mean, I think that's brilliant. I think that's a great strategy. Lower you go, more capital you throw at it. And I stopped buying. I think my last buy on Bitcoin was at 27,000. Hit 28,000. It's too rich for my blood. And I was kind of wrong, but I was kind of right in the same way. I had already bought enough. I had already had my full tank. I wasn't sitting on a huge amount of capital anymore. I had deployed most of my stables. So in a way, I was happy with the bag that I had. But yes, I could have been a little bit more aggressive, probably bought into like 30, 35,000. It was sitting there for a minute too. So I could have probably done that. But, that's another lesson. Don't get too afraid. You can still nibble in. You can still buy a few more thousand, because if you feel it's going to go up a little bit higher, it's okay to buy a little bit more. I was trying to be again, goes back to market timing. I purchased this at 20,000. I don't want to purchase any at 35,000 because I already purchased some so cheap. It goes back to that same mental state. You got to get out of these mental state moments. If it's at 35,000, you see the momentum, you're going into a bull cycle, interest rates are going down, everything is going well. No, get your head out of there. You're better off buying some more at 35,000 and watching it go to 100,000 and sell some. That was the only mistake I made. Otherwise, I played it pretty well.
Okay. And Alex, how do you see it? Or maybe even you can let us know how Agent Max is seeing it.
So I always look at the 4-year cycles, and this is my third cycle as well. And last cycle I cleaned up. I did great. I followed the Bitcoin rainbow chart to help me visualize the 4-year cycle. And it's a very clear pattern where we have about a 12-month period. And right now we're in the 12-month period between November 2025 and November 2026. That is essentially the bear market in the 4-year cycle. Now, as I've learned, it is impossible to perfectly time the tops and the bottoms. Anybody who says they can or they will is going to miss the boat or be left holding the bag. Like DAO King said, they probably will never deploy any capital, or if they do, it will be after they've missed the sharp recovery and they're going to be buying in way higher. So what I do is in this 12-month bear market period is similar to what Kevin does. I dollar cost average in very aggressively. So I laddered out last fall, according to the 4-year cycle. I took my profits. I laddered out like Kevin said, which is essentially dollar cost averaging out of the market when everybody's greedy and we have huge values. Bitcoin's at 120,000. I was dumping my bags every week. Every week I was selling a percentage of my portfolio. And by November, I was basically completely out. And then come March, February, March, I started DCAing back in. And I just keep buying with stable coins that I have in reserve and with my income from my fiat jobs as a software engineer. I call them fiat jobs. I'm out here mining fiat currency. I'm out here mining dollars for time. I take that and I dollar
That's a
cost
good way to
average
look at it.
into my positions, and it is heavily correlated pairs right now. And Agent Max agrees, correlated pairs in this part of the market have the greatest potential for upside when we come out of the bear market, which has oftentimes the biggest upside. If you see right there on the chart where it says where the bottom was in 2023,
Which would be right here.
You can see in that 1 year period from 2023 December to 2024 December, it went up spectacularly. So right there, and then
hold on. From here to where's no
I mean, just look at that, and you see how
right about there. You're looking at about 550%.
And look at how big and fast some of those green candles are. If you miss that run up, you've missed the significant portion of the move in the whole 4-year cycle. So the key is positioning yourself now, and nobody can time that little trough that was right there. That tiny little trough, very hard to get. But if you zoom out to like a 12-month time period where everything was kind of bottomed out, dipped a little further, but it came back up pretty quickly and then really fast started running back up. If you had been DCAing into your positions into, let's say, correlated pairs, BTC/ETH, SOL/ETH, really solid blue chip assets that are very correlated, when that recovery happens, it's like I said, the quickest 2, 3, 4x you're going to do. And that's how you can take 50K to 200, 250K in 2 or 3 years or less. So, and if you are accumulating aggressively with liquidity farming on these correlated pairs, then that 50K you DCA'd in with might actually turn into about 100K worth of Bitcoin, ETH, and Solana at that same low cost basis, because you didn't pay for half of them. You got half of them for free through accumulation and compounding. And then that goes up to 3x, maybe 4x, 5x later in the cycle. And that's how you make huge wealth increases to your net worth versus trying to sit on 50 grand of cash, waiting for some perfect technical analysis setup to time the absolute bottom. The absolute bottom might have already happened. We don't know. The absolute bottom could happen in October or November. We don't know. So I dollar cost average in this entire 12-month period from November to November, and I keep accumulating liquidity position vehicles that have upside potential, which are correlated pairs, wrapped ETH/Bitcoin, Solana/wrapped ETH, things like that. Now I have huge bags. I'm positioned in my portfolio is like 70, 80% blue chip stuff like that. And so is Agent Max's. And we just accumulate, and then boom, we come out of the bear trough. And let's say in 2027, we get the sharp recovery that goes up 2 or 3x. Even if ETH dips to $1,200, let's go extreme in November. Do you know how fast it's going to go from $1,200 to $2,400? I hope my cost basis on my ETH and ETH equivalents, let's just put this in ETH terms, let's hope it's between $1,600 or $1,700 and $1,200. Hopefully I've been buying all along the way, up and down in here, adding to my positions. Then when it explosively goes from, let's say it capitulates at 1,200, shoots back up to 2,400, I've done a 50 to 100% just on the LP value. And that is on tokens that have multiplied themselves through accumulation. And these are accumulation vehicles. As DAO King said, this SOL/wrapped ETH bear is the holy grail right now because of its almost perfect correlation for such a long period of time, and because of the upside potential and the blue chip nature of these tokens. These aren't going to go and disappear overnight like some of these meme coins. No. These are going to be heavy hitters when the market really comes rip-roaring back and we go into a bull market. ETH will be $2,000, $3,000, $4,000, $5,000, $6,000, maybe higher in the next bull run. And if our cost basis right now over this 12-month period is $1,500 or $1,600 or even $1,800 or even $2,000, it doesn't matter. And these correlated pairs, they just track the price of the market. So even if they dip down in value, I do not care. I'm not looking at their dollar price. I'm looking at tokens. How much ETH do I have? How much Solana do I have? How much Bitcoin do I have?
Right. Are you accumulating more assets?
So that's my strategy. I never try to time the tops or the bottoms. I have big old windows on the 4-year cycle where I am dollar cost averaging in, and then big old windows where I'm dollar cost averaging out, regardless of what the market is doing.
I'm gonna add something because he just said something very important for people to really understand. If you really understand this point, you'll make a lot of money. Let's say ETH is going to be, you believe ETH, and I do believe ETH will be about $3,500 sometime end of the year or into next year. Why are you not trying to earn more of it even now? If you're trying to wait for the market to go to like 1,200, 1,300, it might go, it might not go. But why wouldn't you start farming it now at 1,600? First of all, I don't think it's going to go too much below where we are, maybe 10%. Maybe it gets to 1,500. It has incredible amount of support at 1,500. Absolutely incredible. Even during the tariff war happened in April last year, I think it hit 14 something and it just bounced. You saw it bounce back. Boom. It hit that number and went straight up like a rocket. And that was like basically the world was ending with the tariffs. Okay. So let's say we do go down to 1,500, but why wouldn't you want to figure out a way to keep adding more ETH and more SOL into your bags and get ready? Because more time you accumulate, bigger those bags will be in a year from now. That's what a lot of people don't understand, the advantages of LP farming. That's what I did last cycle, not at the scale, much smaller scale, because I didn't have data like this. I didn't have MaxFi. I didn't have Agent Max. I didn't have Alex finding these extraordinary pools for us with his technology. I just didn't have it. Okay. I had to find it myself. And it's very hard to find great pools. I tried different things. It's not easy.
Right.
There's a lot of information. So this is what people miss. If you believe they're going to be the numbers like I do, I have no problem sitting here and accumulating as much ETH and as much SOL as possible. I'm not going to try to time the market because it's unnecessary. And also one last point, if you're accumulating for, let's say, the next 3 months and then it dips and you're earning these percentages, you're great. You've out-earned any dip that's going to happen. That's another thing people don't understand. Your average cost basis is going down by the day. That's another thing no one understands. So these are things you have to take into consideration.
Also, if the price dips, you don't lose any tokens. You only lose tokens to realized impermanent loss. And in a correlated pair like this, it's very low. And with the earning power, how it is right now, we are out earning impermanent loss by multiple fold, by 2, 3, 4x. So even if the price goes down 10%, when it comes back up 10%, you are actually, in dollar terms, much higher than you started with because you have more tokens. I'm earning over 0.5% a day on Solana and ETH. I am gaining 0.5% per day more Solana and ETH. I don't even care if the price dips 10%. When the price comes back up 10%, I didn't lose a dime. I didn't lose anything. The impermanent loss is being far outpaced. I actually have way more tokens than I started with. So let's say I started with $100. The LP value, let's say Solana and ETH dropped 10% in price in dollar terms. Now I have $90 for a while, but I'm accumulating 0.5% per day in more Solana and ETH. When the price comes back up to where it started with, I don't have $100 anymore. I have $110. I have $120, right? I didn't lose any tokens. The difference is on certain pairs like wrapped ETH, USDC, Bitcoin / USDC, if you're running too tight a range on those, you track the price down, but on the way back up, you get capped, you get your head cut off.
Yeah.
So you don't appreciate back up with it, which is not the correct positioning for a bear market where we are looking to accumulate. Who cares what the price is doing? When the market recovers, our value shoots through the roof and we have way more tokens than we started with. We're not capped on the upside. It's a vehicle with full price appreciation capability plus massive accumulation.
And it's crazy that you say that too, because I think there's too many people in this space. And in the past, I've been guilty myself that they aren't thinking in terms of accumulating more crypto assets, but they're just thinking in terms of that APR. I'm seeing people even within my own community, and they're like, look at this position, but everything's being calculated in USD.
Yes.
Right? And so, but
all the dashboards, all the trackers, people are thinking
overthinking.
They're overthinking, and they're also they have to upgrade to the next level of LP strategies and wealth building strategies. Don't just look at dollar value, because that will mislead you. That will cause you to act emotionally and potentially miss out on the greatest opportunities in front of you, and also cause you to do things at the wrong time. So if you're in like a wrapped ETH USDC at 10%, let's say you're at a 15% wide range, and the market moves down 30% like it did in May and June. Everything moved down 30%. Bitcoin, ETH, Solana, it all moved down 30%. If it bounces back up 30%, let's say we have a July relief rally, or let's say later in the year we come out of the bear market and it goes through the roof, 50, 100% back up. If you have a 15% wide range, on the way down, it's okay, you're accumulating, but when the price shoots back up, you get capped at USDC and you realize impermanent loss. And you don't ride that price appreciation potential, which is the wrong positioning for this market timing, and also for these dashboards, trackers, spreadsheets. They need to become more sophisticated. And what I mean is, don't just look at absolute returns, because in a market that moves down 30%, well, everything moves down 30% in dollar terms. Your LP value temporarily moves down 30% as well. Yes, you keep earning fees to make up some of that, but in dollar terms, that can be a gut punch that might make you think, hey, why am I down 30%? You have to then think a level above that. Have I accumulated more of these tokens, more of these assets that are extremely valuable, and when the market recovers will be worth far, far more? And right now, a 30% dip to me means I can DCA in more aggressively, like Kevin. I can get more of these correlated pairs like SOL and wrapped ETH and Bitcoin and ETH, and I can accumulate. I can start those engines accumulating, making more tokens for free, out earning a permanent loss. I don't care the dollar value on my tracker, on my spreadsheet, on the dashboard. It doesn't matter, as long as I am getting more and more tokens. When the prices recover, I am sitting pretty. Last cycle, I did over a 5x doing this. I had 50,000 to about $250,000. Okay, in LPs, positioned correctly though. So I think that's important. And anybody making dashboards and spreadsheets, ask your AI agents that you're using to generate these to do this. First, I want new metrics. Figure out, compared to if I was just holding 100% of this position in ETH, I want to know how this position compares. So if I have 1 ETH and I put it in a SOL ETH pool, even if everything moves down 30%, that 1 ETH would be worth 30% less. Your LP value would be worth 30% less, plus all the fees that you've earned, all the additional ETH. Maybe you have 1.1 ETH now. You have accumulated more tokens, but your dollar value might still be down from when you started. Your entry price, your initial deposit value, it doesn't matter. You have 1.1 ETH now instead of 1 ETH. Now, when the market moves back up 30%, that person holding 1 ETH in their wallet still has 1 ETH. Now you have 1.1 ETH, maybe 1.2 ETH at that point, and it's gone up 30%. So that 0.2 ETH that you earned additionally is also up 30%. You are far outperforming everybody else, but it takes a change of mindset and framing of how you view liquidity farming, liquidity provisioning, and accumulation according to the market cycles.
And you know what, you make a really good point, because that is part of the reason that I got so interested in MaxFi and SnuggleFi technology to begin with. Is before this, I felt like one of my best strategies, unless I was using obviously the Snuggle technique, but one of the best strategies I could use is find correlated pairs, usually, paired with ETH, because I want to accumulate ETH, and find charts where the ETH pair is down, ride it back up. And then I now have accumulated more ETH. When I go out of range, then I can either deposit that in my wallet, throw it back into a lending position, whatever. And I did that over and over again. That was working quite well to an extent. Of course, I probably should have dollar cost averaged out a little bit more of those towards the end last cycle, but the SnuggleFi technology allows me to, in a sense, you can, and I don't want to make sure I'm explaining this correctly, is deposit the liquidity on both sides of the range. And that way there's no swaps occurring. So either A, I'm going to stay within the range and earn fees. B, if I go out of it wide, my tokens are there ready to start earning once it goes out of range the other end, once it rebalances, correct? And same way on the other side. Now, obviously that doesn't eliminate impermanent loss, but it's going to mitigate a lot of it. You're going to accumulate more tokens, especially if you're working with correlated pairs, right?
Exactly.
So that brings me to the next part. And what I was curious is, you know, one thing that I personally have learned being here for almost 2 cycles now is that most people are focusing on only surviving the bear market, or they just completely leave the space altogether. They are always too confident and trigger happy in bullish conditions. But the real money is made during the bear market. So how does Agent Max currently view the bear market? I know we've already talked about some of this. What strategies does she think work best in this environment? And what can we learn from Agent Max before we get in a quick discussion of these accumulators people are getting really interested about, which you might be able to talk about?
Sure. So Agent Max is taking a similar mindset and overall strategy that I used last cycle and this cycle, which is accumulate, accumulate, accumulate in this bear market and position herself in correlated pairs, vehicles that appreciate and accumulate at the same time, so that when the bear market trough passes, let's say in the end of 2026, and we start really recovering into 2027, her portfolio value is going to shoot through the roof. And her main priority is protecting the farming portfolio above everything else, because without that, what are we doing, right? I've seen other projects that absolutely destroy their portfolios, chasing high yields with maximum and permanent loss without a strategy to mitigate it. Her strategy, her edge, is finding pools with strategies using Snuggle rebalancing tech to maximize the capital efficiency and reduce those hidden costs to maintain the principal value of her portfolio, so that way it sustains, maintains, and grows. So that's the whole idea here. With Agent Max, it's a well-diversified portfolio into blue chip accumulators mainly, with some degen convex bets with a small portion of her portfolio to add some juice to it, you know, to boost her earning. But they're small bets. If one of them doesn't pan out, it doesn't really affect the portfolio. It's less than 1 or 2% of her whole portfolio. Doesn't matter. So it's like 70% plus in blue chip LP correlated pairs, and then 20 to 25% in mid to high market cap altcoin pairs, which are decently blue chip, and then like 5% degen meme coin type pairs that have an edge, like VVV/wrapped ETH. That one has crazy impermanent loss. But its earning power is so aggressive that it doesn't even matter. Even the absolute returns in a bear market have still been extremely positive. So we have some exposure to things like that. But again, those are harder to find, and they might not be super good long-term plays, but for a couple months, they might just be absolute printers. And we have very small exposure to those, not the whole kit and caboodle, right? Not the whole portfolio like some other projects I've seen do. They put the entire bag, the entire portfolio in extreme degen pairs. And they will lose 90% plus of their value in the tokens over a year.
And they have.
And let's say you start with $1 million. Let's say you start with 100 ETH. By the end of the year on a strategy like that, you might only have 10 ETH. Even if the market recovers 2, 3, 4x and you only have 10 ETH, you're still underwater. You're not coming back from that. So portfolio protection at all costs with blue chip diversification in accumulator blue chip pairs that are long-term holds with conviction that I'm comfortable holding, that Agent Max is comfortable holding for 5 or 10 years. And also constant monitoring, at least weekly, check in on everything, run the scans again every week, see if anything has changed. And if they have, maybe make some minor adjustments. But there won't be too many adjustments because it's so blue chip. And these pairs really don't diverge too much, especially in a market like this. It's pretty much set and forget. So Agent Max is aggressively accumulating. She has a small hedge on ETH. So she has a small short on ETH that basically all of her blue chip correlated pairs are ETH proxies, if you will. They basically move with ETH. So it has partial downside protection. And it's more than just protection, though, because like I said, I don't really care about the dollar value in a bear market. If everything drops 30%, when it comes back up 30%, we've got more tokens than we started with. We're better off than we started. But that short, it's very small. Doesn't cover the whole portfolio either, just partial. It's strategic. So if we do get a further capitulation event later in the bear cycle, which I don't know if we will or not, but if we do, she can close that short and pack it into more correlated pairs. She can ladder out of the short, and now she's got an extra 10, 15% in ETH terms that she can put into more correlated pair accumulators, which is just like rocket boosters coming out of that bear trough.
Smart.
Okay.
But you don't have to do that. That's super advanced. And you do need to have some knowledge about technical analysis, stop losses. You don't need to do that if you're in these correlated pairs. They just track the market. So it's like, don't even look at the dollar value, just accumulate. Just accumulate.
Agent Max does it because it's been set up like that, and it's also
super advanced.
Yeah, it's just super advanced. And being able to hopefully invest in Agent Max by itself is going to open a lot of people's eyes of what can be done when you run it at a sophisticated level like this.
Oh, yes. I've already had a few people reach out to me and they're like, is there going to be a function where I can just like click and copy? Because I like what I'm seeing, but I'm new to this. And I've had at least 3 of those. At least
there's going to be, we have some top secret stuff coming out that it's going to make it super easy to get into this. Like, it's going to be literally easiest thing to get into this and have Agent Max run the portfolio for you. So we're only a few weeks out, right, for that to happen, I would assume.
I think that's possible. First things first is we are going to slowly roll out these pairs with her strategies so we don't overwhelm people, because they're, as we saw with uSOL/wrapped ETH and now SOL/wrapped ETH, there's a very heavy demand for this. And we don't want people to be over inundated with data where I drop 20 new pairs and strategies and 50 pages of documentation on them. They're going to be like, I'm out. Like, one at a time, drop the ones with the biggest edges first. SOL/ETH is just, it's an easy play right now. Then I have some other ones we're going to roll out. Let people feel them out, try them out, test them, get a feel for these things. And then once all of those pools are available on MaxFi and Snuggle, people are using them and everything, then Agent Max will be able to have all of those pools available with a one-click copy trade button on her page. And that's the first step. And then the next step is what DAO King was just saying, building a mechanism, which I am building right now, that they can one-click copy her entire portfolio. Yes. So they don't even have to think about it. They just click and they are just accumulating basically according to the Agent Max portfolio, which will make the years and years of study and experience into liquidity provisioning and the years of teaching that I've done basically consolidated into a one-click easy solution.
Wow. Wow. And I think there's a lot of investors out there who would be very, very interested in a one-click shop.
Yeah, and I'm also I am working on, and her backtester is so advanced, and it is custom tailored specifically to Snuggle rebalancing technology, true to the smart contracts. So if you have an AI agent and you're trying to make a backtester, like, it is not going to understand how the Snuggle rebalancing tech works exactly. Her backtester does. These strategies, these pools, you can't run this anywhere else. If you try to do this on another system, even on your own backtester, the results are going to be, who knows what's going to happen. Like, it could be ugly. So this only works on MaxFi and Snuggle. If you try this somewhere else, it could be bad. Like, that's why we have these systems in place that remove the hidden costs. Those swap fees eat you alive. Slippage, price impact, eat you alive. Mev bots literally come in and they eat you alive every rebalance event. And then the big dragon, impermanent loss. That is the crux of liquidity providers. But if you know how to out earn impermanent loss and properly accumulate, it's not a problem for us. It's a problem for everybody else who is going to have to run 50% wide ranges on everything and earn peanuts compared to what we earn. And they will accumulate much, much slower than we do. And they will be swapping when they rebalance. And guess who earns those swap fees? We do. So we're in the liquidity pools. All the other liquidity providers, they're swapping to try to stay in range. They are paying us. But guess what? We don't swap. We never pay them back. We extract all the value from all the other liquidity providers into our own bags that we are compounding to take up more and more of these liquidity pools. The TVL in these pools will become, over time, more and more MaxFi and Snuggle. Everybody else is going to get boxed out. And that's a long-term picture. But people, I should say capital, moves to the most capital-efficient systems. And that is why you see what is the Snuggle drain from all these other systems that provide liquidities. It's all draining into MaxFi and Snuggle right now. That's why we're the 15th largest liquidity provider, and we've been around since February. It is crazy. We have $1.2, $1.3 million in TVL. Everybody else's TVL is tanking in the bear market, and it's flowing into Snuggle and MaxFi. Our user base is growing leaps and bounds every day. People are
yeah, you're right. There was a dip, but you're still sitting at what, 1.2?
Yep, and everybody else, their TVL dropped by 2 or 3x. Like, most people lost 70-80% of their TVL in this market. We have gained 2, 3, 4x TVL. We've been doubling like month over month for this entire year almost. And it's very exciting to see. And I would say thank you to everybody. First off, like, this is incredible to see something I've built really being so valuable to so many people. It's really a cool, it's a hard to explain feeling. And the rate that this is happening is staggering to me. And the rate of demand on further development for these informational and strategic layers is so great. I have hundreds of messages a day, just like, when this, when that, when this. And I'm just like, I'm going as fast as I can, you guys. Now, the big thing is what you guys alluded to earlier. When we have one-click full Agent Max portfolio copy trading, it's game over. Everybody will be in there because it removes the year's worth of experience and knowledge you need to do this stuff. Now you can just watch it happen. And if the cool thing is, if you don't like it, you can come and go anytime. We don't try to coerce people to stay into any position. That's one of the benefits of MaxFi and Snuggle. You can come and go as you please, and more are coming. More and more are coming as they figure out these awesome strategies on pools that nobody else can run anywhere else.
Yeah, it's like you have made an AI agent DeFi hedge fund based off your own methodology.
I like to call it a DeFi experiment. I like to call it a big old experiment.
But yeah. Oh, go ahead.
I was just gonna say, I made a very cool tool on the mechanical layer of liquidity pools, the Snuggle rebalancing tech. on MaxFi and Snuggle. It is just the best at what it does. And now the next layer, like you alluded to, is entire LP portfolio management. And that's where Agent Max is that big experiment on the next layer.
Sweet. So I actually I don't want to keep you all too much longer. This has been such a great conversation today, but I wanted to finish talking a little bit more about Agent Max itself, mainly because I have so much within my own community that and those within your Discord and again, if you're not part of the MaxFi Agent Max Discord, please check that out, join and keep up to date. But what are the biggest developments behind the scenes with Agent Max? And you've already talked about this a little bit. And more importantly, because this is what I have discovered, is I am learning so much just following her. And how can others learn from Agent Max? Along with what are those biggest developments over, say, the next 6 months or so?
So the best way to stay up to date on this stuff is the MaxFi Discord server. Go in there. That is where the discussions are happening. That's where the announcements happen for her new pools, her new picks, and our latest videos that come out. Also, check the MaxFi videos page on the MaxFi website. That is where we have taken these videos that we make teaching all of this stuff, and we distill and consolidate it and organize it into very high quality, easy to consume educational articles, where it takes an hour-long conversation like this and turns it into a 8-minute read where everything's perfectly organized. Thank you, AI. It's amazing. Agent Max writes those articles, by the way. She takes these transcripts and she turns them into the perfect learning materials. So the big things coming. And first off, before I get into what's coming, I want to give so much credit to Aaron, to DAO King here. So he's a business genius in his own right. He has done billions of dollars in sales over the years. He is a business mogul. Not a lot of you guys know that. He's literally a business genius. And there's a reason I partnered with him with MaxFi. I had so many people approach me to white label the Snuggle rebalancing technology, including Aaron. I've known him for a long time, 5-6 years now. We've been good friends in the DeFi space. And I know his business acumen. And I said, yes, I trust your strategic thinking, your marketing abilities, everything. A lot of these ideas with Agent Max came from DAO King. I am just the code monkey. Okay, I am a very good engineer. I'll give myself credit there. But business strategy, long-term thinking, positioning, marketing, narrative, that's this guy. So I have outsourced all of that stuff to his brain using his vast resources and knowledge to take that off my plate so I can focus on what I do really well, which is development. And he says, hey, you created the best mousetrap, right? You created the best new tool that I've ever seen in liquidity provisioning, which I've been doing for years. And I said, thank you. And he's like, I have some ideas to take this to a broader market. And his Agent Max was his idea. I already had Agent Max kind of built and working behind the scenes to help me do a lot of stuff. And he's like, we need to take that stuff to the public. They need this. This is a product. There's demand for this level of analytics, backtesting, discovery, strategic LP positioning that doesn't exist. It doesn't exist anywhere. So I'm like, okay, sure. Months in the code cave, just hundreds of iterations, thousands and thousands of pages of data. And now we're here. Now I'll let Aaron take the floor for what is your vision. You've gotten us here now with the Agent Max vision and the mission here. Where do you see this going in the next 6 months?
We talking about the Agent Max as
Eco.
a token, or are we
all
talking
of the above?
Oh, all of the above.
Because it's all intertwined.
Yeah. So from what I'm seeing, first of all, like this SOL ETH is, like I've said, it's a holy grail. This is what you look for. And by the way, I would have been okay getting 50% APR in that pool. I don't care about 150 and 200 and 250 and 300. Those are absurd numbers.
Your projections in that screenshot were on 75%.
Correct. Oh, well, that's based on what Agent Max came up with, right? It's going to taper down to 75%.
Yeah, because we've told the whole world about it, and already 100K has already flowed into MaxFi into that one pool. So the APRs might slowly come down a little bit. So those are conservative projections.
Right. I would assume the pools could probably take another 300,000 to 400,000 before it reaches 75, from what I can see. So I think we're safe. Maybe, I don't know, but honestly,
the cool thing is, I think it'll keep up.
What?
So the demand in those pools, all these people are going to be swapping ETH and SOL and ETH and SOL to get into these pools initially and to take their profits and sell some and do all this stuff. It's going to actually increase the volume. So I actually think it'll have a pretty stabilizing effect as we keep growing. It's not going to just plummet. I think it could even go up. And we're in a bear market, you guys.
It's true.
We're in a bear market. Volumes are slow right now. Even with our massive edge, when the bull market happens, the numbers you're seeing, multiply that by 2, 3, 4 times on the fees and the volumes. Anyways, keep going. Sorry.
Yeah. So, and with all the pools that are, Agent Max is finding, I think there's a couple plays here. Number one, just making it easier for people, especially we've noticed people have difficulties understanding the whole LP thing. For us, it's simple, but for a lot of people, it is a little complex. I think to be able to simplify this where they can go in and out of pools and being able to, MaxFi and Snuggle have already made it super easy. So much of the back end stuff is already done for it once you enter the pools with a single stake or double sided. But I think the real power of the Agent Max is going to be basically now we can identify pools like this, get tons of people into those pools, and we can all earn collectively huge amounts of money that we wouldn't have earned otherwise for long periods of time. This is an actual wealth generator for an entire community, and especially for the community that understands what this is and gets in early. That's number one. Number two, as far as the token goes, the token had a seed sale and then it's going to have a pre-sale. So this is where it's going to get interesting. Whatever people, the Agent Max pre-sale is going to launch 3x the price of the seed sale. I don't think people are going to be bullish enough on this. I think with the technology, how fast it's moving and the pairs that it's finding, and as we're, like Alex said, moving into the bull run, and with the way that Alex has set up the portfolio, I would not be surprised if Agent Max becomes one of those bellwethers going into the 2027 bull run, where we are up there with BankerBot. We're up there, we're also going to have a launch pad. We're also going to have a lot of these things and allowing other communities to take advantage of this intelligence layer that nobody else has. This intelligence layer is so, you see, what people miss a lot of times is information is worth more than anything else. Information is a layer that people pay for, is a layer that people seek. Google didn't get to the size it got because it offers search. The reason Google is so valuable is because it's an information layer. It finds you the information. Same thing with ChatGPT, same thing with Anthropic. These are information layers. So imagine how much something is worth that has this level of intelligence and information on LPs. And by the way, what Alex is creating, isn't a month ahead or 5 months ahead. By the time Agent Max fully launches, will probably be 1 to 2 years ahead of everyone. So imagine investing in something, an information layer of LP farming, and LP farming is huge. It's probably about $4 billion worth of LP pools out there. So think of the advantage everybody that uses
on base chain.
Yeah.
It's 80 billion across DeFi right now, and when the bull market comes, it goes up 10x more or more.
Yeah.
You're muted, Kevin.
You're muted.
Okay, thank you. I was saying on that note, like aren't there more chains that are
Yes,
going to be coming to MaxFi and to SnuggleFi?
there is.
I mean, I know
There is.
now we have Base and a little bit of Arbitrum, right?
Yeah.
Yes.
What's next on the roadmap for our viewers?
I think, well, we've been building for Binance Smart Chain, which has higher gas costs. So it's a little trickier, but it's coming. We've had extreme demand for hyper EVM.
Yeah.
So, you know,
sure.
hyper liquid, that whole ecosystem. A lot of the community has voiced their demand for it. And it has very cheap gas costs as well. And it is probably going to be a quicker port over than Binance Smart Chain. So we might roll hyper EVM out first.
Okay. That's
because
actually
there's so much
exciting.
demand. It's so hot right now.
Yeah. Yeah. I think long term, guys, if you're bullish on Agent Max, you're not bullish enough. I don't think people understand. It's going to be a complete revolution. The people that got into the seed round on Agent Max have real opportunity here to do numbers that I don't even know where we go, to be honest with you, because what is like what Alex said, what is being developed, what is being found is beyond what we thought would be at this level. And, you know, credit goes to him for doing this because it's not easy work. Usually you need teams of people to do what Alex does by himself. So, you know, all the credit goes to him.
Thank you. Yeah, I have just been very diligently working, and you guys know I'm a workaholic, so like I don't stop. I just sometimes need a little perspective because I take a lot of this for granted because I've been doing it for so long. And I sometimes forget that probably the majority of our user base and community is newer to this stuff, newer to liquidity provisioning. I take my decade plus of experience in here for granted, and all the years that I've spent 10 hours a day teaching this stuff, on top of endless hours developing at essentially the blockchain level. I mean, I've built all sorts of MEV bots over the years, arbitrage bots. Like I am deep in the code on EVM and Solana stuff. So I take a lot of my knowledge of blockchain technology and smart contracts and liquidity pools for granted. So, and my technical analysis skills. And something that might seem obvious to me might be completely foreign to somebody else. And DAO King helps remind me of that often. He's like, you got to simplify it. You have to make it simpler for people to understand. So that is where we are guiding Agent Max's development and her next rollouts of features and products. It's going to be simplification of that informational layer that is so daunting to the layperson who's trying to get involved in liquidity provisioning, because they see people like me and DAO King and Kevin and Lucas and the Crypto Labs guys just raking it in year after year with liquidity pools. But we, I think, take it for granted, and we have to step back and say, hey, how do I take somebody new to this level we're at in the fastest way possible so they can have the most success as quickly as possible, and they don't have to learn the painful mistakes that I learned along the way. And that's the mission with Agent Max, is helping new folks understand and get involved in complex topics like liquidity provisioning very quickly, very easily, without having to make a lot of mistakes along the way. If we can remove all that, they can get in the game, they can start earning, they can start accumulating. And as they're accumulating, they can then further their knowledge as they learn over the years while they watch their positions accumulate tokens like crazy, because Agent Max is like, hey, this has an edge at these settings on this pool using Snuggle rebalancing tech. And they're sitting there just accumulating tokens. And then they're sitting there thinking, how does this work? I'm earning all these tokens. I'm making all this money. I am positioning myself for the bull run in the most capital efficient way possible. I'm going to have huge upside when the bull market comes. How does this work? And then they start learning, they start reading our documentation, they start watching our videos. They might go join the UIG, the Underdog Investor Group, where I've been teaching for years, and they might go learn the absolute basics of best security practices, portfolio theory, hedging, liquidity pool basics, like what is actually happening in a liquidity pool, in a concentrated liquidity pool, stuff we take for granted. So we want to simplify that on-ramping process for people who are coming from stocks, who are coming from bank accounts, who are coming from traditional finance. And we want to get them to become advanced DeFi practitioners, liquidity providers, and market makers in the most successful way possible with the least amount of friction. And that's Agent Max's mission. We got the best mousetrap. We made the best tool for capital efficiency, for concentrated liquidity position management. Now, how do we bring that to the masses in the easiest way possible?
Well, that is a lot to take in, Alex. And, you know, I want to give a, it really is. And I feel like the idea that Agent Max is moving towards almost like a one-click copy system is going to be brilliant, especially if you can intertwine that education aspect into the community itself. I find it's amazing. I love it.
Imagine this. On base chain, let's say you got 1,600 liquidity pools on 3 major DEXes. 1,600 pools. Which one do you pick? And once you've picked that pool, what range width do you run? And how do you decide when and how to rebalance your concentrated liquidity position?
That's right.
We've taken a lot of that, a lot of that thinking out of the picture with our Snuggle rebalancing tech, with the rebalance delay, and it makes it a lot less damaging if you mess up. It's so capital efficient and reduces impermanent loss and the hidden cost. So it's a very easy on-ramp. But 1,600 pools, I have identified 22 with the biggest edges as accumulators out of 1,600 pools on base chain. 22 of them far outperform all the others.
Wow.
They accumulate aggressively at very specific settings, only on Snuggle rebalancing technology. How would you find those needles in a haystack without Agent Max? Guess and check?
No way.
And that's the thing. I'm excited to find out what those 22 are, not just really what they are, but what the settings are.
Yes.
That's the,
you know what?
Secret sauce right there.
That's the secret sauce. And a lot of people are really smart and have good intuition and find a lot of these pools themselves, like you guys and some of the other members in our communities have found these pools. And we've added them to the systems, and they are in them right now. They might not be running the absolute optimal settings, but they're pretty close, and they're doing great. They're absolutely crushing it. But now we'll have the full roadmap of the 22 best that fit perfectly into a well-diversified, mostly blue chip portfolio of correlated pairs that has a massive edge over everybody else, over impermanent loss, over the 4-year cycle for accumulation and maximum profits going into the bull run. 1,600 to 22. So think about that.
It's a lot to think about. And I want to give a big thanks and a big shout out to both Alex and DAO King. Honestly, the real builders behind MaxFi, Agent Max. As we have talked about today, the growth has been exponential so far, and I'm personally so excited to see what the future holds. So thank you guys. Thank you.
Thank you. Thanks for
Thank
having
you,
us.
Kevin.